Hello, everyone, and thank you so much for joining us here at NewFi today. We're so excited to talk to you about understanding 1099 borrowers, our guidelines and solutions. We have some amazing content to share with you. And at any point, if you have a question, we want to hear from you. We want this to be not just a one-sided conversation, but you can type in the chat, and those questions will get handed to us, and we will be answering them during the call to the best of our ability. Even if you have a scenario that you want to pop in there, we can connect you with an AE after the call. So we will make sure that you are connected and answered on those questions. Zoom is new to us as a technology on this call. We've upgraded to Zoom, so please bear with us if we have any technical difficulties, hoping that there is not. But we're so excited to have you here with us. This is recorded, and if you have registered for this, it will get distributed to you after this call as well. Now, it is my privilege to introduce our panelist here today. Alina, if you want to start us off here.
Hi, everybody. My name is Alina. I am one of many regional account executives here in South Florida. I have been doing non-QM for about 8 years now, and I work with a lot of brokers such as yourself to help you guys capture more deals that fall outside of those agency guidelines, outside of the conventional box, which is what today is all about. Super, super excited. We had a ton of questions in the past couple of weeks about the 1099 program and alternative options to self-employed borrowers. So I'm excited to share that information with you guys today. Thank you so much for jumping on the call.
Thank you, Kayla, and hello, everyone. My name is Randy Reese. I'm the Southeast Manager, VP of Sales. I've been in the industry for over 30 years. I got started doing wholesale, subprime, non-QM in 1993. Alina and I have worked together for about the last 6 or 7 years. Our goal today is to kind of give you an overview on who NewFi is, and more specifically, get into our 1099 program. So welcome. So what makes NewFi your go-to lender? Before I get into the first couple bullet points, I wanna point out who we are and who we're connected to. NewFi is owned by a company by the name of Apollo Athene. Apollo Athene is the third biggest private equity company in the world. And what that means for us and what that means for you is that it gives us consistency in our pricing. We're not following the bond market away a lot the way our competitors are. So it gives us more consistency on that. It gives us some innovation advantages, which is Alina will go into a little later as far as our LE and our CD process. And we're very, very high on our service levels. With every loan we close, we send out a survey to our loan officer for review on how we do from top to bottom. So it's very important to NewFi and to us that we meet the standards and exceed the standards of NewFi. So we offer multiple channels, wholesale and correspondent, and you can see the pricing engines there: Arrive, Loan Sifter, LoanNext, and Lender Price. So diving in, who is a 1099 borrower? So we put some examples down there, for nail technicians, real estate agents, freelancers, consultants, real estate agents.
So before we jump into the next few slides to give you guys examples of the loans that we closed, to give you an idea of who these borrowers are, I wanted to kind of touch on the pain points of contractor and gig economy workers. So these borrowers rarely show enough qualified income on their tax returns, and that's what traditional lenders typically look for. They look for full documentations, W-2s, stable paycheck, low DTI tax returns. But as you know, with a good accountant letter, you can make solid 150 after the write-offs. You might have 40, 50,000 left to qualify with. So a traditional lender would deny these borrowers, or there's not enough purchasing powers for them to purchase the dream home that they're looking for. So that's when NewFi comes in. We've curated and carefully worked a few different alternative options to help you guys capture the broader range of those clients.
So when is it a good time to use a 1099 versus a bank statement program? So NewFi's model is to have a local account executive in most of your markets. So we're able to, it's a very open statement, but we're able to help you identify what's the best route for you to go on that, to go with that loan.
And these are the conversations that I always suggest, especially if it's a purchase transaction. Start working with the realtors, get the documentation up front. You shouldn't be focused on tax returns only or bank statements only or 1099 only, because we know market shifts, purchase price can go from one end to another depending on the location. So let's look at all those three different alternative options, especially if it's a self-employed borrower. And your local AEs will do the work for you. They'll go through the documents, they'll go through the bank statements to see, and I'll give you guys a few different ideas why you would go one route versus the other. So the main goal is, where can we derive the most income from? And that's where your local AE is there to help you. You guys will work on the tax return income, and then the local AE will help you with the 1099 or bank statement route to see where you're going to get the higher number.
I have a question in the chat. Troy asked, are the rates different? Are they higher than using bank statements?
Great question. They're exactly the same. They mirror each other. So on the bank statement, you have an option to do 12 or 24 months. Same thing as on 1099. You have an option to do 1 year or 2 years. So there's, I believe, an 8 difference in price between one or two, but they are identical to each other. So the pricing doesn't change. So which is another great way for you to look at both, see what's going to give you that higher income. So this is some of the examples for the next couple of slides of the past deals. This is actual live deals that we closed. And we wanted to pick by this different professions because a lot of you guys go probably meet the nail technicians on a weekly basis, hairdressers and so forth. So that's a potentially a referral source for you, and I give you an idea of how we look at these borrowers. So we have a nail technician who gets multiple personal 1099s. She worked for multiple salons. We were able to commingle and use all three 1099s, use a flat income off of it, divided by 12 months, and that was a qualified income for her to qualify for a purchase of a home. She does not have full 2 years of self-employment, but she has been in the same industry for 7 years prior to that. Now, that's not a requirement. On the 1003, we just want to make sure that there's a 2-year employment period that's covered. On both 1099 and bank statement options, we only look for self-employment for minimum of 12 months, as long as previous employment, schooling, any kind of experience can be tied to what the borrower is currently doing. And this will be a perfect example to kind of look, do you want to do 1099 or do you want to do bank statement? So think of nail technicians. Yes, they get paid a 1099 for however many services they perform per day, but you also have majority of deposits that will come from Zelle, Venmo, cash for tips. So you probably will get that higher income of the bank statements when you look in a total of all deposits coming in. Also, you don't know when she switched or he switched to 1099, so you might not have a full year covering that period. But if you look at the 12 months bank statement, you'll get a broader range where we can actually see what the true income for the borrower is. So if you're using personal 1099s, there's a couple of different ways we will look at the income. You can take flat 90%. If you go on 1 year 1099, divide that into 12, that's going to be your monthly income. Because the 1099 is in a personal name, it's a contractor with NewFi, and a lot of lenders do not have that option. If you get a tax preparer or a CPA to write out that that's a contractor worker, not responsible for any expenses, you can actually use 100% of that income, which is a great, great caveat. And again, not all lenders that have that option. And it doesn't have to be just a CPA, it could be a tax preparer.
I have a question in the chat. I'm familiar with how bank statement analysis tools work, but what tools do we have that we can access with our AE to analyze the 1099s?
You have us. It's super easy. send us a 1099. All 1099s, we do want to see year-to-date income. So the income will always come from the 1099. The year-to-date is just there to support, to make sure nothing fell off the cliff, that income is still in line. And there's so many different ways of looking at that. It could be a pay stub. If it's, for example, if it's a realtor, they have a detailed breakdown of monthly commissions, you can use that. It could be a letter from an employer. It could be bank statements. So you have multiple options, but it's super, super easy. Again, you take full 90% divided by 12 months. If that works, great. You're ready to proceed. You don't need to worry about trying to figure out what that income is going to be. Or you can use 100% of it or 95% of it, depending if it's 1099 in the personal name or business name. But your local AE, send them the document, and within minutes, they're going to tell you what the qualifying income is going to be.
Amazing.
Another example, a little bit different. This is going to be a truck driver. So the truck driver started out as a 1099 employee, and then per his CPA, it was recommended that he incorporate himself, and then he started getting paid 1099s into business name. Perfectly fine. We allow commingling, just like we allow commingling of bank statements, personal and business. We allow commingling of 1099s in the personal name and in the business name. And again, if it's a 1099 in the business name, take flat 90% divided by 12 months. That's going to be your monthly income. But you do have an option to go down to 5% expense factor with an accountant letter or CPA, which means you can use 95% of that income if it's a 1099 in the business name. No tax returns are needed.
And we also had a question, which goes right into this slide, which is I have a mechanic that was getting paid W-2 but switched to 1099 a month ago. Which program would you recommend? It has a 720 FICO, 10% down.
Great. So this is probably one of the most exciting programs that NewFi has because it's very, very unique to us. I am not aware of any other lender that's currently offering it. It's W-2 to 1099, no expenses, no seasoning. So this is going to be treated like a regular full doc, going to be priced regular full doc. You could do with that scenario that's in a chat, you could do 90%, so only 10% down. There's no restrictions. And there is no specific time frame needed for them to be on the 1099 employment. So a perfect example would be the mechanic. They were getting paid as a W-2 for whatever reason they switched to 1099. If they have their offer letter, you can use 100% of that. If they have their first pay stub, you can use 100% of that. We'll still look at the 2 years of W-2s, but we're going to give 100% of income of the 1099. This was created originally thinking of somebody like a nurse in mind, the traveling nurse, contractor nurse, where they were originally as a W-2 and then switched to 1099, maybe working for different parts of the hospital, different hospitals and so forth, different hourly rate depending on where they're working at. So we're able to get them qualified as a regular full doc using 100% of the income. All we need is that offer letter, VOE, pay stub, whatever is going to be applicable. And then for employer to confirm that they're not responsible for any expenses. And then you use 100% of that income. No CPA, no tax prepare letter is needed. Again, treat it like a regular full doc program.
Got a question on that. If the borrower only gets a company check as payment, can we use that for the income or a VOE?
Yes, you can.
Another question, are there any tax returns needed to provide on this program?
No, on this one, we will look at 2 years of W-2s, but no tax returns are needed.
Great.
And this is also to get you guys thinking, which we've seen a wave of. So if a new employer comes in and buys out a company, a lot of times they'll say, okay, guys, I know you were getting paid W-2, but we no longer will pay you that. It's the same pay structure, same everything. We'll just flip it to 1099. Before, with any other lender, you would have to wait 12 months. With us, again, no issue. First pay stub, offer letter, whatever the employers can provide, you can, as long as we can see sufficient time from that they've been doing it where we can figure out what that income is going to be, then you can use 100% of that.
How would you approach when an employer letter says $1,000 of annual expenses?
For this particular one, it has to be no expenses. They're not responsible for any. But then what are the expenses? So I would, something like that, that's going to be your one-off scenario, because sometimes their definition of expenses could be a little bit different with what we're looking for. So you might still be able to get around it.
Got it. And then we have a couple of questions. We want to go back on our standard 1099 program. Can you review again how to calculate the 1099 income if you don't have the LOE?
The 1099 income. So let's say your borrower has a personal 1099 for 2024 is 100,000. You take 10% haircut, 90,000 divided by 12 months. That's your qualifying income. If that's enough, DTI works. You don't need anything else. You can proceed as is. If it's not, the purchase price is higher. You're on the cuff, you're almost there, but not quite. And anything can change in underwriting the final numbers. Then if you can get a tax preparer or a CPA letter, you can actually use 100% of that. If the CPA or tax preparer writes that they're not responsible for any expenses because it's a contractor, then you'll take 100,000 divided by 12. That's going to be your monthly income. Same thing goes for 1099 in the business name, except the lowest expense factor we will go is 5%. So then you can use 95% of that divided by 12 months, or again, just flat 90 and nothing else is needed. Super easy.
And when you're using that CPA letter to get the 5% expense factor or lower, what does that letter need to say?
Great question. We're working on a final outline of what we're looking for, but we do need specific wordage. We want to make sure that they notate that it's a self-employed borrower, whether they're incorporated, when they incorporated, if it's a contractor, that they're a contractor, how long they've been doing it, that they're the accountant for this borrower. It's not somebody that's just reviewing the documents, but it's actually filed their tax returns, because we want to see that wordage in the letter. Otherwise, anybody can just glance at it and we have no way of knowing how they know what that expense factor is. But we have a few different actually examples to share with you guys. And I would definitely reach out before you jump through hoops, because I know CPAs can be finicky with how they want to word things. So I would definitely talk to your local AE and have them provide an example of what the letter should contain.
And if I could add, they need to be specific on the year that they did the taxes. So just not that they are their tax preparer, they are their tax preparer and they've done the most 2 years recent taxes or whatever.
Yeah, it doesn't have to say 2024. It just has to cover the most recent bracket that they've done it.
Correct.
Yeah.
All right, we've got another question. So a realtor with a tax preparer letter saying no expenses, W-2 in the industry, but not sales, can use 100% of 1099 sales commission with a 1-year average.
So they've been a realtor for a year. Yes, you can do a 1099. We're not even going to look at the past W-2s, because realtors are commission only. So it wouldn't be the W-2 to 1099. It would just be a regular 1099 program. And you will look at just a flat 1099. And that's it. As long as you have 12 months of that, you're good.
Got it.
The only thing, guys, keep in mind is that we do look at year to date, and realtors tend to be up and down. So in cases like that, again, this is going to be one-off situations. We usually will say 2 months of year to date. Sometimes you might have to provide 4 to see, because again, it goes up and down to show the pattern that some months are higher than the other, to show the average monthly income, to make sure that it's still in line.
What are the reserve requirements? And we have another question. Does this program require reserves for assets?
Yes, if it's a cash out, no. Cash out can meet reserve requirement. Anything over 85%, you need 6 months over 85. So right at 85, you could be the 3 months, 6 months, 9 months, year and a half. So again, depends on the loan amount. But up to 750, you only need 3 months of reserves, unless LTV is over 85.
Got it. And then someone said, are we sure that the LTV goes up to 90 and does it have MI?
No MI on our non-QM products. And yes, on the primary residence, there's no restriction on this product. With the 720 credit score, you can go up to 90 LTV.
Wonderful. All right, then we have some questions back on the W-2 to 1099. I'll go to the next slide. We have the guidelines for that. All right. So
While
does,
you're hitting that, I just want to point out that on the W-2 to 1099, it is priced and treated as a full doc loan. So it's going to have a little pricing advantage.
Yeah, it's better than self-employed.
does the W-2 to 1099 loan work for someone that worked as a W-2 employee and recently changed to self-employed in the same line of work?
It's specific to that, but keep in mind, it's the same line of work, could be a different employer. It just, you can't go into commission only based, then you need 12 months minimum for us to see what that income.
Okay, what's the name of this product on your rate sheet?
So all of our products are named after national forests. So you have Sequoia and then you have Rainier. And under Sequoia and Rainier, then you have different income types. So it's not necessarily the product name, it's just going to be the income type. W-2 to 1099 is a regular full doc, and then 1099 is a regular 1099. Rainier is going to be your top tier borrower, 700 plus credit score, max at 80%, and that's going to give you your best price scenario. But if you need higher LTVs or lower credit scores as low as 620, then Sequoia is going to be your product. And also depends on the DTI.
From W-2 to 1099, if they're not commissioned but have a contract, would that be considered less than 12 months?
Yes, that's specifically for that. Yeah. So W-2 1099 is same line of work, different employer, same employer, it doesn't matter. Then you can treat that as a regular full doc.
Does the CPA letter need to be from a CPA or can it be from an enrolled agent or tax preparer?
It could be either one of those, perfectly fine. We're just going to have to be able to verify them.
And again, it has to be that the tax preparer for that buyer or for that customer. Can't just be a general.
Yeah.
If I'm using W-2 to 1099 and need additional assets to supplement the income, do I still use full doc? Or do I-
Great question. Yes. And we actually have a few alternative options to get additional income. So you can use asset depletion. We have IRA distribution, which one of the recent changes that we rolled out is one, you don't have to be a retirement age. If you're not, we take 10% haircut, and you do not have to take distribution out. So all we do is look at that math divided by 36, and that's going to be additional income without any, again, no distribution needs to be set up, and you can use that in addition to your regular full doc with 1099 income.
Wonderful. And then to confirm, there's no pricing hit for the additional supplement of the 401k assets, etc.
Correct. There's no hit. It's just an additional way for you to get that little bit of extra income if you need it.
Where can we find your matrices?
So all of our guidelines are available on newfywholesale.com. Our marketing team is amazing. So anytime we roll out new changes, you can open up the matrix and you can actually see all the new updates, enhancements in red. And you can look at the bottom of the matrix. It'll tell you the most recent change date. So I don't recommend saving these because we constantly work on enhancing our products. But again, it's like you don't need credentials. Just go into our website and you can pull up and it'll give you basically, we're an open book. It'll give you guidelines and descriptions of all the programs and what's going to be needed.
Wonderful. And can you have non-occupant co-borrowers on these loans?
Yes, you can. And one of the new recent changes we have is that we have a true blended ratio at 75 LTV, either 70 or 75. I apologize. We just rolled that out.
And then I may have missed it. Can you go over the different ways that you account for departing residences that have not sold, listed, or are rented out yet?
Sure, we have a few different ways. So obviously, the first one is going to be if you have a lease, if there's a lease and executed lease, first last month security deposit, you can use that. One of the recent changes that we rolled out, if you are planning on renting it out, you do not need to even order 1007. If you can pull up Zillow rent estimate, as long as it makes sense, we can actually use that amount to give you to offset that payment to give you 75% of that income.
Great. Okay, if anybody has any other questions, keep leaving them in the chat. I'm going to move on to our next slide, which is about how to source 1099 borrowers. I'm our Senior Vice President of Marketing here, and one of my biggest passions is helping you guys find more borrowers, more opportunities, and grow your business individually. Referral sources for 1099 borrowers. A lot of people, like we just talked about, see that whole slide of how many different occupations and so many more that I didn't even list. They are your standard lead sources. They may not even know they need something different because they're a 1099 borrower until they're halfway into the process. So I would say start with the people that you know, and then moving on to even greater, if you want to market to people, realtors. These are people you're in contact with all the time and work with and partner with. They need loans too. And so that is a great referral source. Local businesses and the people that do your haircut, do your nails. These are people that you can continue to market with. CPAs and tax preparers, since they know how they're filing their taxes and how they're getting paid, those are great referral sources. Neighborhood groups, self-employed groups, there is opportunity out there for you guys to market that. And we have 4 resources that you're going to get after this call emailed to you. 2 of them are flyers that you can customize at the bottom and fill out your information with your logo, your name, your headshot, and you can print those out. And then the other 2 are social media posts specifically designed for these programs. So if you have any questions or you need help with those, they'll come to your inbox this afternoon. But my email is kayla@newfi.com. And if you have any issues with it, please just let me know. I'm happy to help. We've got some more questions. Wonderful. Can you combine the 1099 program with a W-2 income where there are 2 borrowers, one 1099 and the other one is W-2?
Yes, you can. We actually can do that on the bank statement program as well, as long as the W-2 income is not being paid out of their own business that we're using for income calculation. But yes, you can, especially if it's like husband and wife. So we're still not going to pull tax returns. We're going to look at 2 years of W-2s for borrower A and then the 1099 for borrower B.
Going back when they were talking about departing residences, and you were answering that, they sent another question. So by using the Zillow rents, that saves the borrower the cost of the 1007.
Correct. Yeah, that's why we rolled it out because it's basically the same thing. And we just thought it's going to be a lot more helpful for the customers instead of having to pay for that.
Where can I confirm what states are excluded from products? I'm licensed in Minnesota, Wisconsin, Colorado, and Tennessee. Are all the programs allowed in the states I'm licensed in?
Yes, it's only the states that we are not licensed in, which Kayla, what are those states?
That
I
would
know New York is
I think it's
one.
New York, Massachusetts, and maybe South Dakota.
Yeah, there's 3 states, I believe. Yeah.
Let's see. For credit scores, what are the minimum credit scores required, and will you take pricing for the higher wage earner?
Great question. Yes, as of now, we are pricing off whoever makes the most money. Before it used to be the lowest of the 2, but that has changed. Depends on the product and depends on the LTV. On the Sequoia Expanded, we go as low as 620 credit score. But if you're trying to max out the LTV at 90%, then you do need 720 and above. But 620 will be the lowest one that we will go on this product, or on all products. I'm sorry.
Awesome. Let's see. All right. Well, that's all we've got. If you have any more questions, please continue to send them. We'll make sure that they get answered after this call. I want to thank Alina and Randy so much for joining us today. Where can they find you guys? What's y'all's emails?
Go ahead, Alina.
Mine is ADERZHAY@newfi.com.
And mine is RREES@newfi.com.
Wonderful. Thank you all for coming, and thank you for your business if you're working with NewFi. And if you're not yet, we hope to be considered for your next loan. Have a
Thank you,
wonderful
guys.
day.
Appreciate everybody.
Have a great day.